Hello. Welcome back to Trading Weekly once again. We're in March all of a sudden. It's been a couple of weeks. How you been, Kay?
I'm doing great, man, and welcome back from your vacation. We saw a few pictures you posted. That was fun to see.
It was
I've been
lovely.
to Rome, so yeah, it's a beautiful place.
I highly recommend it, and I'm looking forward to going back someday as well. There's not many places I go back into Europe, but there's two specific places, and that is obviously Rome, which we found out last week, and Barcelona as well. So, if you haven't been to any of those, I do recommend them both. But yeah, we're back on the charts today, back into the market. It's been a fun couple of weeks in the market, hasn't it, Kay? Ups and
Oh my
downs.
god, crazy!
Well, yeah, exactly. We'll get into that obviously a little bit, but of course, we're just a couple of guys on the internet looking at charts, giving our perspectives with in and around the market, of course. So it's not financial advice. Obviously, massive thank you to Wolf as well for actually the platform up there in the top right hand corner. And make sure you put your stock requests in the comments, whether you're on X or live on YouTube, which of course you can find us at Trading Weekly on YouTube. We've actually hit over 400 subscribers now. We don't ever push it at all, to be honest. But I looked at it this morning, and 405. So yeah, on the road to 100, 100 road to 500, should I say?
Oof, road to
So
500, right?
exactly. But we don't push that at all, to be fair. But yeah, okay, right. So how's your trading been the last couple of weeks? I guess we talk about that first.
Yeah, I think trading has been pretty disciplined, I would say. I've been focused on specifically three tickers: Meta, Nvidia, and Tesla. And the primary reason is because they have been trading in a range, so it's easier to sell options on when stocks are in a range. I have not taken many risks considering the market, and especially with the whole SaaS narrative, really getting impacted. Also, we are at the tail end of the earnings, so there is not many catalysts left for trading as well, especially on those tickers. And honestly, man, from the last 1 month, 2 months, I would say the whole SaaS narrative has been a real dampener. Like data center stocks are down, SaaS stocks are down.
Hmm.
There are not that many great names to trade. That's what I'm trying to get at.
Is there any names in the SaaS space that you're looking at that might just be extremely asymmetrical? In that case, like MongoDB, GitLab, that kind of thing.
Yeah, I mean GitLab. I don't recommend GitLab, and one of the reasons with is that I mean I have been holding this GitLab stock since 2024, and I'm still down 50% on that position.
Hmm.
So
Not ideal.
there is yeah. So it's so I it's just been one of those uh, pretty sad names. But I would say this. I think Snowflake. I would still keep an eye on Snowflake. Datadog. And then one of the tickers that I'm going to talk today is Rubrik, which is on the cybersecurity AI space. I still think Monday has a very good chance to recover because I've been following that company for a while now, and I've noticed that some of the features that they have really launched are actually pretty in line with what enterprises want. Now, whether they are able to sell those features to implement it or not, that we will get to know in the next couple quarters. But I think the features they're coming up with is really really good.
Okay, well, we'll move on to like the actual bulk of the stream then. If you put down Snowflake in the request, because I'd like to request that myself because I want to have it
Okay.
on the chart.
Yeah.
But yeah, as you can see on the screen, everyone, obviously we've got the market overview, fear and greed index, earnings preview, SPY QQQ charts, yearly performance as always, and our picks of the week, which this week I've got Grab and Kay has got Rubrik. So we're excited to get into them a little bit later on. But for now, we're going to move on to the next slide, which was last week's performance. And as you can see, mostly red. There's a few green stocks on there, mostly obviously in the tech sector. But the one that's not, which is on electronic technology, as you can see on the left, which is Broadcom, AVGA up 6%. Other notable names, of course, we've got Nvidia, Google, kind of around 2% negative. Then we've got Apple down just over 5%, and what we've got, where's the other one? Tesla, there it is, down 1.5% as well. So it's a mixed names there. How did you feel last week generally? Because it was a bit of a red week, and it felt a lot worse than that potentially.
It did honestly, and I think things turned out pretty bad on Friday per se. Also, one of the reasons was the job numbers that came out. because instead of adding 50,000 jobs, we ended up losing 90,000 jobs or plus. So that also impacted the market. We of course have the escalation going on in the Middle East. That's adding fuel to the fire, no pun intended. And then basically the whole the gas prices, I think, and that's going to be a key. And if you, I didn't even realize that ExxonMobil, which used to trade around the $100 is actually sitting at $150. We completely missed that run up on
Wow,
the
I think it
on the
might go a
oil.
little bit higher tomorrow as well, by the looks of it.
Yeah.
So we'll see what happens there. But yeah, generally quite a red week. We'll get into the charts in just a second. I think I've got something to say on SPY, which is something we've been saying for the last couple of months, and I think it's finally happening. So let's jump into that a bit later on. But first of all, we've got the fear agreed next week and see that we're sitting at 27. 1 week ago, which of course we weren't live, that was 38. And then 1 month ago, we were 46. So we are dropping back into extreme fear. Potentially, again, we'll see at the charts in a minute, but we could potentially jump into extreme fear for a period of time, shall we say. But I don't think it's all doom and gloom in terms of the markets, but we'll get to that a bit later on. Do you want to talk to the left side of the screen there, Kay?
Yeah, so put to call has, as you know, has slowly starting creeping up closer to one, which of course, which means that market is more bearish compared to bullish. Generally is around point 0.6, 0.65. That's when, as a when folks are risk on in the greed, we look at put to call around point 0.6, 0.65. Wix actually is 29. Generally, Wix is around like 17, 18. So we do expect some volatility going on into next week. You can see SPY was pretty flat. And I know you're going to cover SPY, so we're going to skip that. QQQ point flat as well for the week, even though it felt very red on Friday and Thursday, but overall it was pretty flat for the week. Couple key events all week, we'll be keeping an eye on the war/oil prices, on what's going on, and as the news unfolds, we will probably see more impact there. Then we also have some initial jobless claims numbers that are going to come out on Thursday, and then we have the core PCE numbers coming out on Friday, which is 312.
Is
Yep.
that not both Thursday?
Actually,
Have
it
we
was
got,
three.
got
I think I got the. I think it's 313, not 312.
okay.
Yeah, yeah, yeah. Because
So
Friday, I
Thursday and
remember
Friday.
core PC. Yeah,
Thursday and Friday, respectively.
Thursday,
Happy
Friday. Yeah.
Sunday to Verla. Thank you for the message there. Of course, we did have Money Manage earlier as well, Hood, Coin, and TTT, which are all on the list. Verla, I think you pointed
Path.
out Path,
Yeah.
which of course we've got on the list. I think that's probably first up as well. So obviously we'll get to that very, very shortly. We'll move on to the next slide then, which is earnings. Not a huge amount in terms of interest this week, but a massive one for me. We've got Neo before market open on Tuesday, which I'm really looking forward to seeing. And of course, Oracle as well. The chart is not looking so good, but it looks like it's kind of breaking out of a lower trend line, which is quite interesting. Perhaps we can get that down on the suggestions as well. Okay, if you could do that.
Sure.
Heading into earnings as well could be quite interesting for people to see. But yeah, Oracle is one of those I've got kind of my eye on at the moment, and Rubrik as well on
Yeah.
Thursday after the close, which you're covering a bit later on. Is there anything else on this screen that you're kind of looking at for the week ahead?
Well, it seems like UiPath is also reporting earnings this week.
Oh yes,
So I think, yeah, those are the main names I would say.
you've got Adobe as well after the close on Thursday.
That's true. So we'll probably see how. Actually, there's another one, Sentinel One, right underneath Rubrik.
There we go. Yep.
That's in the cybersecurity space.
Okay.
Yeah.
Interesting things going on with cybersecurity at the moment. Obviously, it's very necessary, but is AI actually going to do it? Who knows? Is there any immediate thoughts on that, Kay, or should we just brush over that?
No, I think we're good. We can move on to the
Okay.
SPY and QQQ.
Yeah. Okay, then. First charts of the day. We've got SPY daily on the left, as you can see there, and on the right, we've got the QQQ weekly. I'm going to talk a little bit to the SPY daily because you can see on the left there we have this red shaded area. This has been going on for about 3 months now, just over 3, maybe even almost 4 months. This shaded area, and I did a bit of analysis on my live stream on Friday and on the market close, and we haven't had a period of sideways action for about 6 years. I think it was this length of sideways action, which sounds a bit crazy, but obviously we've been in this range for almost 3 months, and we haven't had a 3 month period like that for a number of years, as I just mentioned. And it looks like we kind of tried to break out of it on Tuesday, but we kind of came back up and held it. Perhaps a little bit of desperation there, kind of, oh no, we're going to lose the space. But Friday, we have had a drop, not only a gap down, but an undecisive candle, which may lead to more downside, at least temporarily. So targets wise, if we do get this drop down, I'm looking around that kind of 660 to 664 on the SPY. That would be ideal if you get a bit of a bounce there, because obviously we've got the 100 moving average here. With the 200 moving average, this is kind of a moving average cloud I've got on the screen here, but I just like to, just the way I look at my technical analysis. But the reason I want it to kind of come down to 660 and 664 is because it would be a slightly higher low, kind of coming up in this trend. So even though the trend is kind of weakening, it would still be technically a bull market trend. So if we get a bounce at 660, 664, that's kind of what I'm looking at. Moving over to the QQQ, that would obviously come down to kind of 570, 580 respectively, which of course we do have the Fibonacci levels there, which we've had for a few months up there now. What are your thoughts on these two charts? I've had my kind of 2 cents here.
I think first of all, it's amazing that we didn't have this sideways motion for last 6 years, and that's why I think one of the reasons is it is getting extremely tricky to trade. Right, you do have to trade names. You
Yeah,
cannot just pick anything. Like generally, when we are on risk on in greed or extreme greed, you can pretty much pick any ticker, and you people are you will start to see on FinTwit there's just a lot more screenshots of people, hey, this is successful, that is successful. But I think this market has been really brutal, especially in terms of trading. And also some of the names, like if you look at Mag 7, just the Mag 7, forget about any other sector, every pretty much every stock is down year to date, or in the last 1 year. And that is also an indication is the market is not sure what is happening, and that's why we are in this sideways. I am actually interested, if we actually dip below, if we break down, and of course there are different support levels that you will have throughout, but actually if a 10% drop happens on SPY, right, you will actually be filling that gap that happened back in June of 2020. You see that gap? It's right uh, on your left hand side.
June of 2020.
Yeah. So you see where the subscribe. You use a subscribe. There's
Yeah,
a gap there.
this one.
That gap,
That's
which is
the 2025. Yeah,
yeah. So that's 2025. So that is almost a 10% uh, down. I'm not saying that's going to happen right away, but
that's from here, isn't it? Not from the top.
correct, correct.
Yeah,
So from where we are is about 11%, 10.73%.
and
So
that's a pretty dramatic drop there.
that's a
But we
pretty
did have
dramatic
that
drop.
last year.
Hmm.
The weekly on the Qs here, we did drop from 540 all the way down to 410
Yeah.
thereabouts, which is a massive drop. That's over 20%, of course. Um, but yeah, going back to that kind of gap that you mentioned there, I mean, 10% from all-time highs would see about 700, so it'd be about 630, which kind of comes in line with the 200 moving average. So that could be the first point of call. Then if we lose that, then of course, kind of
Yeah.
604.
Yeah.
But yeah, I think if we do, it might go one of two ways. I'm not predicting the market thing, but just kind of speaking to my past experiences. We might just get a complete free fall down from this gap, which we've kind of started seeing on Friday. And price action on Friday was not very nice at all. Had a bit of a kick up into the close, but we did subsequently drop down just before the close. Anyway, doesn't matter. Or we could come back up to this sort of level, to kind of 678, that kind of level, and then really kind of drop down
Yeah.
from there. So there's two different scenarios that could play out. Um, or of course, the third scenario is of course we just rip and we moon. This is a bit of a fake out, and of course we just go straight up. But with everything that's going on in the world, it's unlikely, but we'll see.
Yeah.
Um, yeah.
And
Any
and
final thoughts?
also there isn't any, so the earning season is over, right? We had pretty good decent earning season again, growth for most of the companies. I think they've reported, I think 100 out of 100% of the companies had I think a EPS beat, or 90% had something like that. There were some numbers floating around anyway, so it's a pretty good earning season. The Fed chair is not changing until I think middle of June, or starting of June. So there is not going to be any rate changes from the Fed. So that catalyst is not coming up any soon. So what are the catalysts actually left? The only other catalyst I can think of is the next earnings season, which will probably start somewhere in April, I guess. April, mid-April.
Yeah, three, two, two months from now. Yeah.
Yeah.
Yeah, it's going to be interesting in the next few months because obviously the market generally is kind of forward looking, 6 to 12 months forward looking. And if it's pricing in stuff that might be happening in 6 to 12 months' time, then that might be an indication of where we're heading now.
Yep.
Bit more of a bearish take there from us. We're a bit more bullish than normally, but we'll see what plays out. And we'll be back next week at 1 p.m. Eastern time, of course, to go through it all over again. And then obviously watch it back up into the 700s.
Mm.
We'll move on then. This screen, obviously, we can find us on relative platforms. Of course, we've got on the screen there X and a YouTube icon there for me. So at Shaun Trades _. And where can we find you, Kaye?
Well, the same as Shaun, you can find me on X under the handle InvestK, Substack, and YouTube with the same handle.
Awesome. Yeah, and of course, the past, so we did a couple of picks 2 weeks ago. I picked Neo and Kaye picked Meta. Subsequently, we've actually done the last 2 weeks' performance rather than last week's performance. So the last 2 weeks' performance, Neo is down 8%. Got earnings coming up this Tuesday, though. Maybe I should have selected it this week. But yeah, you've got Meta as well, which was down just a modest 1.2%. So you take the lead for now this year, Kaye.
I mean, I think overall I'm doing well this year, right? I mean, last year I remember I was like down, I was back like behind 10 weeks. I was behind you, right? It's like
Yeah, I think at one point it was like 11-2 or something
something
like
like
that.
that. Yeah, I was in double digits, I'm behind you, and then I ended up with like a single digit behind at least.
Yeah, but you're doing very well at the moment, so that's good. But yeah, maybe I need to back up my ideas and pick some good stocks. Obviously, this week we've got Grab and Rubrik, so we'll
Yeah.
see how they get on for next week. But be sure to follow us on X there as well and other platforms. We'll move on to the next slide then. My pick of the week here, which is Grab. I'm going to pay attention to the fundamentals for a second up there in the top left-hand corner, so you can see. I don't know if you can read that in such detail, the viewers. I mean, I think Kaye can. But we've got total gross merchandise value, top left quadrant. And then we've got total monthly transacting users in the top right quadrant. And then revenue and net income in the bottom quadrants as well. So you can see everything's going from bottom left to top right.
Mhm.
The shares outstanding as well has been flatlining for the last year or so. So not diluting, at least yet. You wouldn't really dilute at these levels. But yeah, going to the chart now, then we can see it's actually a weekly chart I brought up here today. We can see on the screen here, we've got some resistance. That's happened many, many times throughout the last, let's say, almost 3 years. And obviously, we've kind of traveled up in this channel as well for the last year and a half or so. We've come back down to the bottom of the channel. I've drawn a zone here from, I think it was 370 to 4. And I've already got long dated calls on this one for expiring January 2028. And I'm thinking about adding to that position. Okay, I want to get your take on this as well. Given the price action that's obviously happened in the last 4 months, you can see that on the screen. It's been basically straight down. But we've got the volume profile here. We've got the support resistance zone that we've just previously mentioned. And if we do kind of, make a bit more of a low here, that would be a higher low as well. So that'd be good for this, current channel that's kind of moving upwards. My overall target, of course, is $7, regardless of when that hits. If it happens in the next year, I'll probably sell my calls. Or if it goes to expiration, or 2 or 3 months out, then hopefully we can get back up to 7. But yeah, I'm thinking about adding to my long dated call position. What are your thoughts on that, and what are your thoughts on the chart that you see on the screen?
I think overall it's the fundamentals are definitely improving. If you look at just the revenue growth, and it has really jumped from, we were flat in Q1 2025 at what, 773, and then we, most recent quarter they reported 906 million. So that's a good sign. So the revenue is accelerating. Even net income, it jumped from all the way from what, 37 million to 171 million. That's a pretty massive jump on the net income side. So at least in the last quarter, the performance has looked tremendously well. The EPS looks well. I think the issue that they have, and even on the free cash flow, they had lost 159 million the previous quarter of 2025, but then they actually had a net positive free cash flow of 49 million. Now it's actually lower because they have had free cash flow of 300 and 200 million few quarters back. So overall, just I think that particular fundamental has led to the decline in stock price. But I do think I like the long term positioning, because in that region of Southeast Asia and basically they are the Uber, right? So I think from a long term perspective, yes, I like it. And so when you're saying you want to add to your long term leap calls, is that the 2028 or 2029 has not come out yet, right?
Oh yes, the January 28 calls.
January, yeah, yeah,
Yeah.
yeah. I mean, so what level you're thinking? Like around like a 350, 4 o'clock? Sorry, not 4 o'clock. Four 350, four.
So in between 370 and 4, yeah.
Mm.
So
Yeah,
this red zone basically. I mean, I could start adding now because obviously
I think
the price of the calls have come down quite a lot, and obviously the volatility has come down as well. So
I think what you can do though is if we actually see the break of this support level and we start trending towards what the 380 level, I think that's when the $4 call
at the
will
bottom of the
be.
range, then
Yeah, that's
yeah,
where I'm.
the $4 is what I'm after. Yeah, that's the calls
Yeah,
I've got. So
that's where I
um,
will target the $4 for 2028.
yeah. So okay, that's the ones I've got already. So I can add to those positions. You know, if we get down to 370, then that'd be ideal. I think.
Yeah, I
But
mean,
anything
then
else?
you can even look at like the. I don't know if they have a 3.5 or not. Do they have a $3.5? Let me see
I
on my
can't
side.
remember actually. No, I just focus on
I
what I've
can
got.
check. 1 second.
um,
So 2028. No, they have a $3 or $4. So this is on a single dollar level. So yeah, so maybe then four will be definitely very cheap at that point in time to get
yeah,
into.
I'm currently 18% down on the course. So that's not the end of the world. And I bought them January, so still got
I
plenty of
think
time left as well. So
if you're trading leaps, right? This is generally the trend that happens with leap is most of the time you will be down on the leaps throughout, and
yeah,
then you are just looking for the reason you are buying leaps for 12 to 18 months forward looking is because you just need that little patch when the stock price jumps up for whatever reason, and that's when either you roll the calls forward or you basically sell the calls and make profit. That's basically the reason for this whole leap strategy.
yeah, no, I completely understand that. Obviously, I'm sure the viewers tell that I'm fairly new to options, but I'm learning week by week, day by day, and I'm kind of really excited about it as well. So, obviously, Kay's been a massive help for that throughout the journey. So, thank you, Kay, for that. So that's my pick of the week, which is Grab, and we can see on the screen there. We're going to move over to Kay's pick of the week now, which is Rubric, which is one that we've had on the stream a few times before. And excited what you've got to bring to the table today.
Well, so Rubrik is reporting earnings on Thursday, and as you can see, like, Rubrik has really been hit pretty hard. Let me also pull the chart on my side. So we were trading in this range of we were trading at like what $100, and then the stock was 90.
Yeah,
So multiple, as things have. But let's touch a little bit some stats over here. So there's a generally a 22% move that happens with Rubrik. So you're looking at about like an $11-12 move. So based on today's price, you are looking at the price to be somewhere in the what is that? Probably 72, 73 range,
yeah,
and then at the bottom will be 44, 45 range. That's basically you're looking at. Now of course, by the time you're on Wednesday or Thursday, the price might be different, but you're looking at 11, $12 range. That's basically what I'm trying to get at. And generally market only overestimates the move by 43%. So most of the time you are going to look at this 11, $12 move range. So you could play an iron condor if you are interested in playing earnings call, but earnings play. But I'm actually not going to do anything, especially right now in this situation. I'm staying away from the earnings trade. The other key highlights from a fundamental standpoint is that the company has been pretty positive. There's a lot of positive sentiment behind the company. We had 48% year over year revenue growth. You had 82.8% non-GAAP gross margin improvement, and then there is record subscription ARR, which is up 34% year over year. So the fundamental numbers are very solid. The overhang that Rubrik will have going into earnings is the um, can AI replace uh, SaaS softwares, number one, and second, security. So I think, unfortunately, this AI overhang is on these things. But here's an irony in this whole situation. If AI is going to replace SaaS companies or these security companies, then you need to build data centers. You need more energy. You need more compute. But you're seeing on those segments also. Stocks are down on data centers. Stocks are down on energy sectors, energy, battery storage, and all that. Stocks are down on everything related to AI. So and chips as well. Like Nvidia has been like flat trading amazingly for so many months now. Actually, AMD is already down. So this is a very very interesting time on. I actually am not going to say I know how to trade. I'm just trying to figure out every single day how to trade. Very very difficult for me, at least. I'm noticing it's difficult to trade, so I don't know a good way to trade this one. I would not trade. I would wait for the direction before actually saying hey, because there are a lot of, every single SMA is a resistance right now, and I wouldn't be surprised actually we go down to the 40s. So
Yeah, I mean, I've got an idea in here in terms of a trade. Obviously, with earnings coming up on Thursday, it's going to be quite tricky. But first of all, I wanted to point out the fact that we've got. How do I move it? Here we go. You see the RSI there.
mm,
It's an RSI divergence that we've just had. So we've had the lows that came down in this sort of area, which you can see on my cursor, which was the deepest red moment for RSI. And then the stock ran lower than this previous low, and then obviously subsequently actually produced a slightly higher RSI, which is an RSI divergence, which means the strength is there at a lower price action, which means people are interested generally. It doesn't work every time, but it's worth noting. Obviously, we do have the RSI kind of pushing up from there, still around 50. But in terms of an entry point, once the earnings have played out, we have to kind of reassess what I'm about to say. But generally, what I would normally look for is a retracement, obviously back up to this 20 moving average, which I think that is no 50. So is that 50 gold one? Yeah,
yeah.
a retracement back up to the 50, and then I would expect a rejection there to come back down to the previous high here, which is almost where we are, so maybe kind of 55, and that's where I would enter with a stop loss. Obviously below that low, maybe about 50, 49, maybe even 48, depending on your risk style. And obviously that is with the target of coming back up to kind of the 200 moving average or 100 moving average. Of course, this would have to be done on a day by day analysis, but that's initially what I would look for, definitely
Mm.
for this trade. So I've written it down on my notes there because I really like this setup. If that setup plays out, if the setup doesn't play out, I stay disciplined and I don't take the trade. It's very very simple in that respect. I wonder what the other people are thinking about Rubrik. It's one of those stocks that has hit and miss,
So
but
at least
you're talking about a good
so,
story here for Rubrik.
so at least based on my initial research, the sentiment is very positive on Rubrik. But the sentiment
Okay.
has been very positive on Rubrik when it was 70, when it was 90, when it was 80,
Yeah.
60. So that's not the problem. So the sentiment is there, the fundamentals are there. The issue is that the overhang of AI narrative,
Yeah. Yeah.
and just a general broader market, right? If you notice, right, because of this whole spy and QQQ trading in this range, it creates more uncertainty, and you're seeing a push to the downward trend. Now, question is, we have been in a downward trend for Rubrik for a while now. Question is, would this earnings change, or would we see another downtrend from here? Now, if it starts to get into 40s and 30s, maybe it gets even more, juicy.
Yeah. I mean, we'd have to wait, I think, 3 or 4 trading days after the earnings as well, because we saw it even just in the last report. You can see it gapped up here, and then 2 weeks following, it's straight back down to that same level. So
Exactly.
it's going to be hard for any investors or traders if it does pump up, 10, 15% on the day. It's going to be hard for people to still buy that because of its past reactions.
Exactly.
And
and,
obviously,
and
the market is emotional, of course.
so in my way, if you are going to trade Rubrik, especially for the earnings, I will go probably iron condor on this one,
Yeah.
and I will take profit. If I'm up 30, 40, 50% on that credit, I would actually close that trade. I would not continue trying to get the entire 100% credit on selling iron condor. Yeah.
Nice. I think we covered Rubrik quite well there. I'm sure people will love that. But okay, should we move on to the charting section?
Yes, we can kick it off. So the first one will be path, and then we can go
If you're
through.
new here today, of course, if you just put your ticker request in the comments down below, whether on YouTube or on X. We've had quite a few already. We will get through them, but I think we've got space for at least 5 more.
Yeah.
So go ahead and stick them in the chat, and we'll get to them as and when. Okay, let's jump into the charts then. What did you say was first case? Sorry, I interrupted
Path,
you.
UI path.
UI path. Okay.
I think while before you actually start doing the technical analysis, I'll just say this. UiPath, unfortunately, no matter how good their earnings are going to be, will have the same AI overhang, in my opinion, like all other stocks, all other SaaS stocks. Until that narrative starts to shift, we will not see any SaaS stock, rallying.
Yeah.
That's a general outlook that I think is happening with SaaS in general, regardless of their earnings.
What do you think would have to change for that sentiment to change? I changed twice there.
I think the narrative in terms of they are able to have they're able to improve their not just renewal of their existing contract, but they are able to sell, cross sell across divisions and upsell more products and services while proving that their AI features that they are embedding in their softwares are actually getting adopted by organizations. Give you an example. Satya Nadella most recently showed a new Copilot. Copilot is one of the worst AI models, at least implemented on enterprise side. People don't like to use Copilot. It sucks. It cannot even do a basic email analysis from Outlook properly. So maybe Satya Nadella is using some special, Copilot version which works very well, but at least on the enterprise side, it sucks. I mean, that's just a layman user's perspective from an email. People who actually are developers, softwares, they hate Copilot, at least from the feedback I have received. So I think that narrative has to change in terms of the AI features of the software companies are getting adopted by enterprise, and they will only adopt and buy more if they are seeing benefit from those features.
It's a bit like Palantir in a way. In the early stages,
Yes.
obviously not everyone knew their capabilities of that particular software. Once that took off, then everyone was buying them, and the word was getting out. Then the enterprise was buying them, government was buying them, and obviously that's where we saw in the stock price.
But see, these companies have already sold the stock to the enterprise. So the companies are already using the software. Now the issue is a lot. So the way, if you take any software, for example, whether it's CRM, whether it's Adobe, whether it's Monday, whether it's whatever, right? You take a name. They are embedding new AI features within the tool. Some have a model where they're giving out a free trial version. But the question with software companies, the biggest challenge is the adoption of the software or the feature by the client. And until that happens at scale, because otherwise, how are you going to make money?
Mm.
Right? If client is not ready to the whole business of software is subscription based, right? So you need to get more people or more seats per user per month. But then if you're adding the AI features, it's increasing the cost of the company. That's why you're seeing a lot of layoffs on happening on the side, because the cost for the company is increasing and they are not seeing the revenue move at the same pace.
It's
Because
catch 22,
when
isn't it? A little bit.
yeah, because let's say you run an AI feature and suddenly it starts sending a lot of calls and your cost is going up because you have to build more data center, you have to pay more to buy chips and all that stuff, and then so your cost is going up, revenue is not coming in because enterprise is not buying it at scale. That's the problem.
Interesting to see how quickly that adopts, if at all. Obviously,
I
do you
don't
think?
think that's going to be a quick one. I think this
Yeah,
narrative will take time to shift because has been so negative for time, and then the problem is if AI can do everything, then why is the data center stocks not going up? Why are the chip stocks not going up? Because you cannot have both ways, right? You cannot not have the SaaS softwares go down, but the AI stocks are not going up.
here's a case study for you. So I'm a new investor, well not new investor. I'm an investor who's interested in SaaS software. I know a little bit about it. Obviously not me, but just an example. There's ETFs out there which are related to SaaS companies, and
IGV.
I still think that it's going to happen within a kind of 4 to 10 year period. I want to add to my position. I want to continue, at dollar cost averaging. I think probably is the best term to kind of call it. Is that something that you would look into do?
I
Not as
think
such a
I
price,
agree.
but
Yeah,
yeah,
I think I would rather go with the IGV ETF, which is
yeah,
like all SaaS companies, because the problem is we don't know who's going to be the winner. Some big names will win. Some new names might just pop out of nowhere and win.
exactly. Yeah,
Some existing players might completely diminish. So we don't know. So I think rather than picking, hey, I'm going to pick Monday, or I'm going to pick Path, or I'm going to pick Snowflake, I would rather go IGV, um,
ticker symbol
to hedge.
IGV.
Yeah, to hedge.
Okay,
And IGV actually has a very good return if you actually look at the ticker per se. When we can bring it up, actually they had a very nice clean break on the trend line.
we'll bring that up. Might as well. Are you looking at the daily here? Are you?
Yeah.
Okay, let's bring up IGV for the software ETF.
You see the downtrend was broken, and we had a nice little retest.
Oh, you're talking about this
This,
one, perhaps?
yeah, yeah,
Yeah. So getting a bit of a push up in the last 2 weeks actually of trading
exactly.
days.
I mean,
Which is good.
it's still down. It's still below its 200 SMA. It's still below its 300 SMA. So if you are interested in SaaS space, I think this might be a better play than individual names. Now, keep in mind the ROI on an ETF will always be lower than the ROI on a single ticker, right? Because you pick Snowflake, for example, and Snowflake runs up 100%. IGV will not run 100%. Just for that perspective.
It may do eventually. If you're looking like a 5 to 10 year
Yeah,
time
yeah,
horizon,
yeah,
it could
yeah. I
eventually
mean,
do that. And we've seen that
correct.
with SMH, for
Yeah,
example. That's gone up
yeah. No, what I'm
massively in the
saying is
last
that
5 years.
don't expect ETFs to run the same way as an
Yeah,
individual
of
ticker.
course. But this could go down to someone who's at a specific time in their life or a specific kind of risk profile and kind of how they trade and invest.
Yeah,
So it's just worth keeping out an eye for kind of software stocks in the name of IGV. Sorry.
yeah.
Okay, well we've diverted there slightly. We'll move on back to the slideshow. What was the first ticker again? Sorry,
So UiPath.
UiPath.
Yeah.
Sorry, Verla. We will eventually cover Path. Uh,
We got a little too sentimental on the SaaS stock.
we did. But it's interesting. I mean, a lot of people are kind of talking about it. Obviously, when you have these stocks down so much, people want to know why and what's the potential of these stocks. Anyway, we're diverting again, or I am at least. Path weekly chart. We are down to the all-time lows. Yeah, pretty much all-time lows of about 930. We did bounce off of that from 930 up to all the way to kind of $12 now, which is pretty good. I think this is a weekly chart we're looking at here, Kay. I think if we can get back above this volume profile, which is it's a ton of volume at this level,
Mm.
if we can get back above that, come back down and retest it. So let me draw that out for people to
While
see
you
what I'm
do
looking at.
that, let me also quickly say, since they report earnings, we need some earnings data too.
Sure.
So generally, the actual move is about, let's say, 13 to 14% of the price. So this is what $11 stock would be, $2, something like that. Let me see.
Yeah. Do actually have other lines on this chart. Obviously, it all boils down to the earnings on Wednesday.
Yeah, and then generally the market overestimates about 58% of the time. So you're looking at a move of maybe like 1.3 to 1.6, somewhere in that range, plus minus.
Okay. Yeah, something to bear in mind.
Yeah.
But yeah, overall, I think the move towards kind of $15, if we get to there, then come back. I'm
No,
not comfortable
it's
getting
going to
down.
be difficult because you are under the 300 and the 200 SMA. So at
Yeah,
1344 and 1309, that's a major resistance to break.
yeah, definitely not easy. You can see that reflected on the screen there. So Kay's talking about this is the 100 and 200, these
Yeah.
two. So that's going to be a big kind of resistance. It actually added nice support here back in November of last year, and resistance actually recently in February. So that again, like you say, that'll be hard to get through. But if we do get up to 15 and come back down to 13, that could be a good entry point just there with a nice bit of support underneath. for your trade. Okay,
Next is Hood.
Robinhood.
Mhm.
It's one of those I never really look at actually, but
You used to trade Robinhood a lot, right? Back in the day.
yeah, back when it was kind of in the 30s, 40s, and then I just kind of lost interest. I think it just got a bit too overhyped, maybe too volatile for me to be fair. Um, it happens. It happens.
I feel like Robinhood right now is kind of forming a range. It's been in this little range of 71 and $81 from last a month now.
Same as the market, isn't it? Really, it's
Mm, true.
been ranging. Yeah, this one's been holding up with kind of with the market.
Yeah.
Previous trend line here, um, coming across all of these lows. So if we were to get some upside, that would be an important resistance point to get through. Obviously, that is actually quite far away from where we are now. Verla says, I will never trade Robinhood because of their CEO, Vlad Tenev, I think his name is. But yeah, we're getting some rejection here off the 20 moving average. But it needs to see a bit of support. We do have volume profile here, I suppose. I'm not going to be trading it. It's in no man's land, in my opinion. It's not got much support. I mean, it could be one of those ones for range bound trading for you, perhaps. Okay, like you just mentioned it, obviously. So
Yeah, that's true. But generally, in this kind of a market, I stick with the bigger names than more. So
yeah,
this is still a high beta name, right? That's the problem when you are in a very when you are in the situation where the market is not doesn't have a clear direction. I try not to sell options on high beta names. I stick with more traditional big, big techs, where I'm comfortable. If I own Meta or Tesla at a higher valuation, I know that at some point in time I will recover. But I think 67, which is has a nice little support level. I feel like that might be a good support level for if we see a little bit of a downturn.
you say
But yeah,
57 there, did you say?
67, yeah.
Oh, 67. Okay, yeah,
Yeah. I mean 67, 39. That, I mean, I'm just like drawing lines to see where the most of
yeah.
the.
I mean, 67 is where I actually had my line as well, near
Okay.
enough. So obviously
Yeah,
we've got
that's
previous
exactly the one.
resistance here,
Yeah,
so
yeah.
just makes a lot of sense. That's a massive pivot point back in February of 25, and there's a bit of a gap fill there as well. Is from way back in June of last year, so that's definitely
I
a
mean,
point of contention for sure.
Robinhood launched their platinum card. I don't know if you saw that.
No, I didn't actually. No. Don't
They
follow them,
launched
but
a new credit card, platinum credit card. I think the fee is 6.99.
not too bad.
So they are also expanding on the credit card business side. So I don't know how
Yeah.
that impacts their business. I don't follow Robinhood that closely either.
Okay, I'll move on to the next one then.
Next one is a Coinbase. I think this is very
Coinbase.
interesting. Uh,
I've I've always found it really hard to do analysis on Coinbase because it's just so it just obviously ties in with the Bitcoin price so much, which I get obviously because it's Coinbase. It makes a lot of sense, but it makes it really hard to trade because obviously when you have the Bitcoin price going 24/7, when the market opens, Coinbase could be any price. I guess that makes it really attractive to some people, but just not for me personally. I don't know if you're on the same boat or if you find something different with
no,
Coinbase.
I don't trade Coinbase either. It's a very, very interesting. It's like just the swing of Coinbase is so massive. Like, it was like trading at 441 and the stock price was down to like 139. It's just the swing is crazy.
Yeah, we had a bit of a breakout here. A draw from maybe the wicks that might be a bit better. Yeah, so we've got a bit of a breakout here on the trend line. I'll get rid of that one for now. So that's something. Maybe we come back down to kind of retest this level. Maybe we come back down to get
I think
looking
last
maybe
4 weeks
solid.
for Coinbase has been pretty good as well. If you look at the weekly chart, the last 4 weeks have been pretty good for Coinbase.
Yeah, I mean 140 up to almost $200. That's no,
Yeah.
it's not a short move, is it?
No.
But again, that testifies to the amount of volatility that's actually in the stock. So it's very hard to kind of stomach that, especially if you're a new investor or trader.
Yeah.
Very, very difficult. No, I don't have much else to say on this apart from obviously retesting and then maybe moving higher. Target price of around 260 would be really good.
But
If
then
again that's
if they
over
drop down to
20%,
fill that gap, that will be interesting, right? Because they had a little nice gap over the trend line.
yeah. This one here, yeah, yeah. Maybe they come back down to fill that then.
Yeah.
Again, too erratic, too volatile for me. Let's move on.
Next is the trading desk (TTD).
Oh wow, yeah, this one continues to get beaten up. Obviously, it's had a good last week, going from a good last week, should I say, in inverted commas, from 25 up to kind of 30. So you've got a good 20% move there. But if you just look at what's happened to it um, in the last couple of years, it's
I
not
think
good. Let's get to the weekly chart.
if you remember the era of AMD, like for one straight year, AMD was like the advanced money destroyer.
Yeah,
I think trading desk has been in that kind of a run as well. But I think with them launching a new news with tying up with OpenAI, that might at least give the stock a
ah,
little bit of a push.
is that
Uh,
why this is moving? Is it?
yeah, that's one of the reasons why it moved. I think that was news came out on Thursday, I believe, Wednesday or Thursday, something like that. Because I think even though if you look at the trading desk's earnings report, this per the CEO, automobile market, and I think there was another market he said was weaker. But I think in general, the Amazon um, um, advertisement, which is the DSP, they have been gaining ground a lot, and that is starting to show cracks in the TTD business.
Right.
But with OpenAI, if you start tying up with OpenAI, that can at least change the narrative. It's not that the company has lost customers or a company is doing worse, but it's starting to show that there is legitimate competition from Amazon.
We've got the MACD kind of ticking up. RSI really, really pumped in the last couple of days, as you can imagine, up to kind of 60. Still plenty of room to go up to kind of 70s and 80s. So there's still
Yeah,
plenty of
I
room
mean,
here.
the stock is down 276% from its all-time highs of what? Not even all-time highs actually, just to fill
Say
the
two.
gap.
Did you say 276%?
$82, yeah, because it will be $112. So there are two big gaps that was created with TTD, right? So the stock was trading at $139, which is what, 367% up from here onwards. But the two gaps, the first gap fill will be around the 200%, which is like what, doubling from here, right?
Yeah.
That's the first gap. And the second gap is even above that.
Yeah. I mean, gaps galore. You can see on the screen there.
Yeah.
For me, it'd have to get above this trend line for me.
Yeah, I mean, I'm not saying it's going to happen, in
No.
next few weeks or so, but those are massive gaps. And
I mean, even if you wait for that, even if best case scenario it breaks out there, comes back down and retest.
correct. That would be your
And
ideal run up, right?
yeah, if that does play out, and it's still a very handsome return. If it again does play out, it's over 100%, and that's just to the first line.
Yeah.
But yeah, a lot of things have to go right for that to happen. So thank you, Money Manage, for bringing up those stocks, Hood, Coin, and TTD. We'll move on to the next
Next is
topic.
OSS. I think this is the first
OSS.
one stop sync. Let's see what do they
Stop
do.
systems. Doing very well on the chart. This is the 2-day chart. I'll switch it back to the 1-day chart for this one. This is the first time we've had this stock, I believe.
Yeah, let me see what they do. 1 second. So they are into designing, manufacturing, and market rugged high performance compute, high speed switch fabrics, and storage systems for edge applications for AI and machine learning, sensor processing, sensor fusion. Interesting. And they are a US based company in California, 107 employees. Funny, they were founded in 1998, so it's not a new company. It's been there. It's been there
Hard
for
to
a while.
adapt, isn't it?
Yeah, and their revenue is around $18 million. and EPS is about 0.03, so 3 cents. Very interesting.
See how the volume's been going. Volume's definitely increased since the turn of the year, actually. Well, you can't see that because it's not on the screen. There you go. Yeah, the volume's definitely increased, especially early on, of course, which you'd expect with this high price action. Come down since, but still way above the volume it had in the last 6 months of last year. This area down here is a bit of an interesting area for me, kind of $7 to 7.50, that sort of area. Obviously, we've very clearly broken this trend line, and we can't quite get back up to it. It's kind of rejecting off of even a level just below that. So perhaps if it gets down to 7 to 7.50, that might be an area of interest for investors and traders. I think I'd have to do a bit more due diligence into kind of what the stock.
I
You
ha-
mentioned what it does, but still.
I have
Yeah.
some. I was doing quick digging around the net income. So they used to be net income positive until the last quarter was 2022 quarter three. That's when they had a net income positive of only $132,000. Then they basically went negative all the way until the last quarter of quarter three 2025 when they were actually up 263K in net income. The free cash flow, unfortunately, they're still burning through. The last quarter, they had a free cash flow of minus $3.72 million. So, yeah, but it's interesting like what turned around from a net income perspective, right? So that's very interesting. The revenue actually jumped all the way from 14 million in quarter two to 18 million, 18.78 million in the previous quarter. So almost a $4 million jump in revenue.
Wow.
So
Something's happening.
something's definitely happening. Yes.
I've done what I normally do and just draw a bunch of lines on the chart.
No, so more definitely more due diligence on this one. On
Yeah, I mean, I'm now thinking about this sort of level here because obviously we do have this cloud, the yellow one that's kind of flowing through the screen there. That's a mix of the 20 and the 50 minute average. So we're kind of sandwiched in between those. But I'm now thinking about this wedge on the screen that we see here, this triangle that I'm kind of edging. If we trade within that and then make a breakout of this line or this line, that's when I'd be interested. As I say, I'd have to do a bit more research, I think, on top of that. But that's initially what I'm looking at, that wedge there. Hopefully that helps you, Gooey Goosens. We haven't seen you for a while, actually. Welcome back to the streams. Hope you're doing well. Hope your year has started nicely. Yeah, okay. Well, have you
okay,
got any more?
so that's also, but we can go talk about Snow and Oracle because those were on the chart you wanted to look at it.
Yeah, so snow for me, we spoke about SAS quite a bit throughout this whole session, really. But the reason I wanted to bring this up is because I had this kind of zone drawn out between 140 and 160 essentially, and it's kind of edging. Well, it's actually bounced off of there almost 3 times in the last couple of months now. So, is is it finding support? I'm not too sure. Let's have a look at the weekly chart. I know you want to talk about snow, but I'll keep it brief.
No, no, no.
But
You go ahead.
the
I
weekly,
actually was. I have not even been trading Snow for a while now. You can. I'm
but
looking
you
for
have a bit of
some.
an interest in it, don't you, as well? So.
I'm looking
This is the weekly trend line, which I thought I had drawn on here, but maybe I don't. Maybe it's white since I changed my charts.
at.
But yeah, you've got this black one kind of coming through the screen here, and again acting as a really nice support. So this area is a really good support of kind of confluence. It's since gone up $20 since then, so it's kind of hard to go from there. But knowing where to enter now is going to be tricky, but just it's worth pointing out. Okay, what are your thoughts?
I think, see, from a revenue standpoint, they had a revenue was up 30%. The net revenue retention was up at 25%. Sorry, at 125%. So I think the fundamental metrics are still there. It's improving. But in general, the momentum behind the stock is not there. And that is generally driven by the whole SaaS, AI is going to eat SaaS lunch. That's So until that narrative changes, I don't see any of the stocks in SaaS space like making that turnaround. So there might still be some pain in the short term.
Yeah. So since you was talking there, I drew this obviously trend line from across the tops there. So kind of a broadened wedge, but a wedge nonetheless. So until we break out of this wedge, I think I'll leave it as it is. Okay, we'll move on to Oracle then. Last stock of the day.
Yeah.
This one is really interesting for me because I've got this line similar to the snow chart actually, but it's a bit more dramatic. This is the weekly chart. We'll jump into the daily chart now. So this trend line has been going down for quite some time, since September of last year, and
Yeah.
it's just showing signs of breaking out. Now it's not a breakout that I'm excited by because it's not, they're not big candles, not full-bodied candles, which is what I really want to see. So perhaps actually I want to see some price action like this. If we move up, somewhere maybe about 175. Obviously, we do have previous support here. Come back down to retest the volume profile, which is here, and then make a move up to kind of 195 to kind of 200 plus. That would be the ideal scenario for me. And obviously, the entry would be down here on the retest. And that'd be a nice return of just over 20%, 25% almost. Yeah. Oracle as a business, though, they're very involved in a lot of things, aren't they?
Mm. However, there are two news, right, that kind of creates this uncertainty right around the earnings. So one is that they will be laying off thousands of employees, right? So there's going to be some percentage that and that is being attributed to the fact that because they have such a high cost on doing data center build outs for OpenAI, that they need to lay off to basically save cost. That's the narrative of there. The second news that came out on Friday is that the OpenAI and Oracle decided not to expand the Texas data center site. I think it's just that one specific site that they are not planning to expand. Other sites are still in progress, and I think that's where during the earnings call, people will be very interested to know what basically is happening on that front, because the whole reason Oracle stock ran up is when they announced that they have a tie-up with OpenAI, and they'll be participating in this whole Stargate operation to build out data centers. So, because if you remember, the stock was pretty much in this range of $120 to $170, and then we started seeing those massive run up as they started announcing their relationship with OpenAI, and the stock basically ran up all the way to what, 340 or something like that at one point.
Yeah, I'm surprised how volatile the stock is actually.
Mhm.
Yeah. Okay. Well, that caps off a really good session, I thought.
Yeah, I think
Back in
considering
a
how
couple
the
of weeks.
markets are behaving, it's crazy.
Yeah, I think we said it earlier. It's a bit more of a stock pickers market in certain ways, but obviously be careful when you are doing that because some stocks are tied to certain industries that are not doing so well, or likewise doing quite well. So just be careful when you're out there trading. But we don't need us to kind of tell you the basics there. But it's nice to kind of go back to basics and kind of ground yourself with what your thesis actually is when you're trading and investing. Yeah, great session today, Kate. Obviously, massive thank you to Wolf to let us use the platform. We really, really appreciate it. We will be back same time next week, actually, 1 p.m. Eastern time. Your clocks have gone forward. My clocks haven't, so it's a little bit earlier for me, but that's okay.
Oh, really?
Yeah,
I
yeah.
thought you guys always go 1 week before us.
No, so we're not doing it for another 3 weeks. So I've
What?
got 3 weeks of the stock market opening an hour earlier here, which actually it's not too bad. It's quite exciting. It's always nice to have really random time changes. But
I
yeah, for
think
3 weeks, I
we,
couldn't believe
we need to get rid of this daylight saving
it.
stuff. It's
Good.
just it just gets annoying.
You tell the farmers that, yeah.
Yeah.
Okay, well, thank you very much, everyone, for tuning in. Obviously, Money Manage, Verla, Justin, once again, Guru Goosen's making a return as well. So thank you very much for those comments. We'll see you, no doubt, next week, 1 p.m. Eastern Time. Kay, any final words for the stream?
No, I think just be careful in the market, and it's definitely a very tricky time for investors and traders.
Yeah, trade safe, everyone.